Alright, listen up. While everyone's been glued to Bitcoin charts, something massive just happened in the Hedera ecosystem that nobody's talking about. We're talking government adoption, Google integration, and institutional money flowing in. But here's the twist. The on-chain metrics are screaming a completely different story. So which signal do we trust? The partnership announcements or the cold, hard data? By the end of this video, you'll know exactly what's happening with HBAR and whether this is your entry point or a trap. Let's dive in. Hey everyone, welcome back to the channel. If you're new here, I break down crypto news that actually matters. No hype, just analysis. Do me a favor, smash that like button right now and subscribe if you want to stay ahead of the market. Trust me, you don't want to miss what's coming next. So, here's where we are. HBAR is currently trading at 20 cents, which represents an 88% surge from its yearly lows. That's not pocket change. We're talking about a token that just clawed its way into the top 20 cryptocurrencies with over $8 billion in market cap. Now what's driving this? Three major catalysts just hit the market simultaneously, and I need to walk you through each one because the devil's in the details. First up, institutional money. The Canary HBAR ETF has pulled in over $71 million in inflows since launch. Now, before you start doing backflips, let's put this in perspective. That $71 million represents just 0.91% of HBAR's total market cap. Is that bullish? Yes. Is it game-changing? We'll get to that in a second. Second catalyst. Google Cloud just added Hedera to its BigQuery public datasets. For those who don't speak tech, this is basically Google saying, we think this blockchain is legitimate enough to put in our data warehouse. Developers can now compare Hedera's transaction costs and speeds against every other blockchain, track tokenized assets, and analyze DeFi trends, all through Google's infrastructure. That's not just integration, that's validation from one of the biggest tech companies on the planet. While all these bullish headlines are dropping, the on-chain data is telling a completely different story. And this is where most crypto investors get wrecked, folks. They see the press releases they FOMO in, and they ignore what the blockchain is actually showing them. Stablecoin supply on Hedera, down from $170 million to $127 million this month. That's a 25% drop in stable capital sitting on the network. You know what stablecoins represent? Buying power. Dry powder. When stablecoin supply drops, it means liquidity is leaving the ecosystem, and it gets better or worse, depending on how you look at it. The total value locked in Hedera's DeFi ecosystem has crashed from $400 million earlier this year to just $192 million. That's a 52% decline in DeFi activity. So while institutions are slowly dipping their toes in through ETFs, the actual users and DeFi protocols are heading for the exits. That's what I call a contradiction, and contradictions in crypto usually mean somebody's wrong. So the question becomes, are we witnessing the early stages of institutional adoption before the masses catch on, or are we watching a marketing campaign dressed up as momentum? Stick with me, because the next piece of news might just answer that question. Now we get to the big one, the Philippines government partnership. And I'm not talking about some vague "we're exploring" blockchain announcement. This is a structured national rollout with 6 administrative regions already signed on. The National Capital Region Cordillera, Central Luzon, Western Visayas, Eastern Visayas, and Davao are all implementing Hedera-powered solutions right now. According to Macro, a well-known cryptocurrency analyst tracking this development, this isn't a pilot program, it's a full-scale deployment. The Philippine Department of Science and Technology has partnered with the Hashgraph Group to implement Web3 infrastructure across government services. We're talking digital identity systems, citizen records, climate data integrity, public service documentation, and even tourism digitization. Now here's why this matters from an investment perspective. Macro pointed out that Hedera was selected for 3 critical reasons: ABFT grade security, which is the highest security standard in distributed ledger technology, transaction fees under $1,000th of a dollar, and near zero energy consumption. The Philippines government isn't experimenting here, they're building permanent infrastructure. And in my expert opinion, government adoption is the ultimate mode in crypto because governments don't pivot every 6 months like startups do. But let's keep it real for a second. This rollout will take time. Government implementation moves at the speed of bureaucracy, not the speed of crypto Twitter. So if you're expecting HBAR to pump 500% next week because of this news, you're setting yourself up for disappointment. However, If you're thinking 12 to 24 months out, this is the kind of fundamental development that separates long-term winners from flash-in-the-pan hype coins. Let's talk about what Google's BigQuery integration actually means for developers and enterprises. According to the official announcement from the Hedera Foundation, this dataset will be actively maintained with periodic updates aligned with network changes. So, translation: this isn't a one-time publicity stunt. Google is committing resources to keep this data current, which really signals a long-term commitment. For developers building on Hedera, this is huge. You can now benchmark Hedera's performance against Ethereum, Solana, or any other chain without building custom data pipelines. Want to prove that Hedera handles transactions faster and cheaper? Just pull up the BigQuery dashboard. This kind of transparency is exactly what institutional clients demand, and honestly, it's what separates professional-grade blockchains from the meme coins clogging up exchanges. Now, about those ETF inflows. According to data compiled by Value, the Canary HBAR ETF is sitting at $69 million in assets under management. That's modest, but it's also just the beginning. Remember, Bitcoin ETFs started slow before exploding into multi-billion-dollar vehicles. The real question is velocity. Are inflows accelerating or stagnating? Right now, we're seeing steady but not spectacular demand. That tells me institutions are cautiously accumulating, not aggressively aping in. Here's my take. The ETF is providing a legitimacy stamp. Retail might not care about regulated investment vehicles, but pension funds, family offices, and institutional allocators absolutely do. They can't just wire money to Binance and buy HBAR. They need SEC-regulated wrappers, custodians, and compliance frameworks. That's what the Canary ETF provides. But let's address the obvious issue. Why is network activity declining while all this positive news is dropping? This is where experience separates amateur analysts from professionals. Infrastructure development and user adoption don't move in sync. You build the highway before the cars show up. Hedera is clearly in infrastructure building mode. The Google integration, the Philippines partnership, the ETF launch, these are all enterprise-facing developments. They're not designed to pump retail speculation. They're designed to lay the groundwork for sustainable long-term adoption. The problem: the market doesn't reward patience. Traders want action now, so they're rotating into higher velocity plays while Hedera does the boring work of building real utility. In my expert opinion, this is actually bullish for long-term holders, but, kind of bearish for short-term traders. If you're looking for a quick flip, HBAR probably isn't your play right now. But if you're building a position for 2025 and beyond, this declining network activity might actually be your accumulation window before enterprise clients start onboarding in volume. Now let's look at the charts because honestly, price action always gets the final vote. HBAR formed a textbook double bottom pattern at 15.5 cents, touching that level on October 17th and again on November 10th. The neckline of this pattern sits at 22.05 cents, and we've recently broken above the 25-day exponential moving average. The RSI just crossed above 50 and is pointing upward, which suggests momentum is shifting bullish. Here's what gets interesting. HBAR is also forming a bullish flag pattern, which combines a sharp vertical rally with a consolidating descending channel. When you stack a double bottom and a bullish flag on top of each other, that's typically a high probability setup for continuation to the upside. My technical target? 25 cents, which represents a 32% gain from current levels. But here's the risk. If HBAR drops below that double bottom support at 15.5 cents, the entire bullish thesis breaks down and we're likely heading lower. That's your line in the sand. Below 15.5 cents, I'm out. Above it, I'm watching for that 25-cent breakout. Alright, that's the complete picture on HBAR right now. Government adoption, Google integration, modest ETF inflows, declining on-chain metrics, and a bullish technical setup. It's complicated, which means the market hasn't figured it out yet, and that's exactly where opportunities hide. If you found this analysis valuable, check out my other videos. Both are linked in the description and will help you understand the broader smart contract platform landscape. Don't forget to hit that subscribe button and turn on notifications so you never miss an update. I'm posting daily breakdowns on the biggest movers in crypto, and trust me, you want to stay ahead of these trends before they go mainstream. Quick reminder. Nothing in this video is financial advice. Cryptocurrency is volatile, risky, and you can lose everything you invest. Always do your own research, never invest more than you can afford to lose, and consult with a licensed financial advisor before making any investment decisions. I'm here to inform and educate, not to tell you what to do with your money. Stay safe out there.